Hi, welcome once again to Kotak Securities Weekly Fundamental Podcast. This is Rini Mehta. Last week, Sensex and Nifty saw some profit booking. However, broader indices ended the week with marginal gains. Sectorally, the performance was mixed, with BSE Power Index posting strong gains. On the other hand, BSE IT reported sharp decline, as first quarter results of large IT companies were weaker than expected. Recent high inflation numbers and recession fears in US, along with sharp rally in dollar index, influenced global markets. In India, CPI inflation, that is retail inflation in June, was flattish month on month. Markets will continue to react to global macro factors like inflation, interest rate measures, currency and commodity movements. With the start of June quarter result season, we can expect stock and sector specific action over the next 1 month. Now if we look at the FPI flows, month till date, FIIs are net sellers to the tune of rupees 10,459 crores. We expect FPI flows to remain volatile in the emerging markets on account of rising geopolitical risk, rising inflation, tightening of monetary policy by central banks, etc. Now moving on to the top stock picks along with some quick result updates. First we have is HCL Technologies with buy rating and a target of rupees 1,165. HCL Technologies first quarter results are polarizing. The current quarter is no different. First to the good parts. Good revenue growth of 2.7% quarter on quarter, 23.4% year on year growth in total contract value, healthy client metrics, and retained guidance of 12 to 14% for revenue growth. Now coming to the bad part, margin was weak, impacted by cost inflation and annual price reset in a few IT services contracts. The unexplainable part is retention of margin guidance band. So guys, our revenue estimates are unchanged while our earnings per share declines a tad due to weaker margins. Valuations are looking cheaper, so we maintain buy rating on the stock. Lastly, our pick of the week is Apollo Hospitals with buy rating and a target of rupees 4,710 rupees. It's a window of opportunity. So Apollo Hospitals fourth quarter EBITDA was 6% lower than our estimates, largely on slower hospital traction. While another delay in health company fundraise is a dampener, execution stays impressive and Apollo Hospitals is witnessing healthy demand tailwinds across all segments. Post a 38% fall from its 52-week high, valuations are attractive. For the hospital segment, current market price implies a less than 16 times FY24 EV by EBITDA multiple, which is at the lower end of its historical range. So guys, that's all for today. See you again next week. Thank you. Signing off.